Hey everybody, hey traders, happy Monday. Welcome to the Pulver Report. Let's get started. It is Monday, the 17th. Happy Martin Luther King Day. The markets are closed today, at least for Wall Street. So stock market will take a little break, which is probably a good thing since we started off with a pretty rough week. Let's get into the risk disclaimer in a second. But we'll get into year to date, what the overall performance is, where we're sitting in the markets. It is going to be an incredibly busy week. I've got let's see, 1, 2, 3, 4, 5, 6, 18 expirations this week that I'll be navigating. So excited to share that, excited to talk about it. So let's get started. All right. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptocurrency pairs, you know the risks. Okay. Let's get to the charts here. Like I said, Wall Street is closed. Happy Martin Luther King Day. We are sitting at, for the year, NASDAQ is down 4.8%, S&P down 2.17, Dow down 1.17. The 10 years up almost 30 basis points, nearly 1.8. We'll take a look at that TNX chart in a moment. Bitcoin down 8.21% for the year thus far at 43. We've seen it tap below 40 briefly. We saw Ethereum tap below 30 briefly. It's down 8.03% for the year. So, yeah, like I said, markets on kind of their heels, which is understandable. We had a pretty amazing run the last 3 years. We've had a pretty amazing run the last 14 years. So this is all kind of that correction territory we've talked about. You can see it on my charts. Let me expand this a little bit. So are we going to see, this? Are we going to continue to see this type of volatility? Maybe. Let me change the color so it's a little bit easier to see. Is this are we going to struggle to take out the lows, or is the market finally going to give it back a little bit? We still have the yearly pivot. We have our 200 EMA correction on the SPY, on the Qs. The Qs did come down and tap that yearly pivot, or very close to it, rather. Just off that yearly pivot, just off that 200 EMA. Tech is clearly on the slide right now. And how aggressively does it come back? Well, if we do end up finding that yearly pivot and the 200 EMA off of last year's highs, that would put the SPY with a correction, I believe, over 10%. The yearly pivot's around 9.92. If we hit the 200 EMA where it's sitting right now with price, that's around 10.88%. So, 10 to 11% is certainly that buy the dip territory. If you're thinking any major stock in tech, most have had some type of corrections and slide. I know that I am in some pairs that I'm repairing. I'm in Pinterest. I am in Zillow. I know that's real estate. If you're looking at like Shopify or Peloton or some of these other crazy stocks that have had these amazing runs, a lot of them have been taken back. If you look at ARK Investments, Kathy Wood, she's been making headlines for the last couple of years. ARK has been getting just demolished. I do think that ARK is, in a position where it'd be nice to see some buying. But in the environment right now, I think that tech is probably the riskiest play or sector to be in, simply because so much of it is going to be geared towards, if we're going to raise rates, if we're going to taper, typically it is a play into value as opposed to growth. So do I think that ARK are strong like 3-5 year buys? I do, but I think you're going to have to weather the storm and dollar cost average into them now. So anyway, but ARKK, ARKQ, ARKG, I'm personally in those three right there. In not big positions. I mean, I essentially got in off the 2021 yearly pivot. So my positions from yearly pivots to current price, I'm upside down about 19.5%. But I'll sit and wait, because if we get back to these highs ever, that's a 60+% upside. So I mean, I can weather the storm, add some more to it. We're already sitting around 61% pullbacks from the COVID crash low in March of 2020. So anyway, I want to review some of the expirations for this week. Like I said, I have 18 different expirations that I'll be talking through equities on demand this week. Nice to see everybody this morning. Happy Monday. We'll keep the session pretty short and sweet today. Again, markets are closed, and we have actually an event going on right now with Market Traders Institute called Mind Over Markets. And I'm hoping that a lot of you that are tuning in are able to get some access to that. I know we have like 2-day access. Then we have some VIP opportunities for Wednesday through Friday for some breakout sessions and some best practices and how we're trading the markets and stuff like that. So, but we'll talk about that more in the trading rooms this week. But Gary, good morning. William, good morning. Donna, what's happening? Tron, good morning. David, Andrew, Jason, nice to see everybody. Yeah, thanks, Jason. Smash that like button already. Love it. Cool. I'm going to make a list right now of the 121 expirations for this week. And it's no alphabetical order. I'm just listing them as I went through my portfolio last week. Uh, expiration, HMC, XZ, SKLZ, that's skills. Chewy, I had a covered call that I need to re-up. HIMS, Coin, GLW, PFE is Pfizer, SoFi. DNUT is that is Krispy Kreme. I'm actually going to close that credit spread a little bit earlier. I'm up a decent amount of profit. I don't necessarily want to wait another month for that one to expire, so I might just take my 67% profit after some weekend decay. AAPL, SPY, Tilray, have a covered call on that one. GPN should be in profit. AEO. All right. So here's my list right here. So that's a lot on my plate for this week when it comes to stocks and options. But I'll be just kind of looking to see, of all of these, it doesn't mean that I'm taking assignment of all these. A lot of them are probably in profit. I did take some nice profit last week. I had a Jade Lizard expired on CLF for about $3,000. Pretty happy with that one. I like the position I'm building in silver. HMC, that's Honda Motors. That one's in profit. United States Steel, Zillow's had a decent, base around like high 50s. Skills is upside down or just lowering costs. Chewy, I'm lowering costs. HIMS, I'm looking to get out of that one with a repair trade. Coinbase, I like long term anyway. GLW, that's in profit. Pfizer's in profit. SoFi's off the lows. I like that one popping back up towards $24, $25. That should be a nice little profit. Krispy Kreme's in profit. AT&T's in profit. Apple is a straddle that I'm just going to take a look at and monitor this week. That's not technically an expiration, so that goes out to March. Yeah, and then the SPY was a straddle as well. That goes out to April, or I'm sorry, February of 18, February 18th. But the SPY, I'm just going to be watching the prices. I'm trying to get the SPY and the straddles like break even or better on one of the two trades. So we do need to see some market movement this week. Maybe after having today off, the markets come out swinging with some volatility tomorrow. I'm also still going to watch volatility index and VIXI and VXX, things like that. So anyway, but it's going to be a busy week. So I'm looking forward to that. And hopefully, most of these or all these will be proving either good repairs, lowering cost basis, or profits, of course. Okay. So that's it on the stock and options side of things. Let's take a look at some cryptos. Bitcoin is sitting at 42,633. I wouldn't mind if Bitcoin finds a way to just slowly flush a little bit lower. But I do think that Bitcoin is going to be something that, current levels down to 30,000. I'm pretty interested in just throwing some more money at it. I can say like do it once a month. I can say it once a week, but there's just something where I'm just looking at a certain dollar position I'm willing to build in some of these cryptos, Bitcoin, Ethereum mainly, and then some of the peripherals that I've already established for the last couple of years. But I want to be on the long-term train for Bitcoin. I certainly want to enjoy the run if it's at current prices. And in 2 years or next year at this time, next year we're up to 100K or higher. Everyone's going to be upset that they weren't, at least considering dollar cost averaging into cryptos or Bitcoin now. So, again, that's why I'm saying dollar cost average, because maybe we drop to 30,000. Maybe we drop to 25 or 20,000. That's okay. I mean, we have a yearly pivot right there at $20,700. Could we find it and tap it and be the base? Maybe. So anyway, I still like all my levels. If you're following me in my newsletter, pulverreport.com, my top weekly picks and some of my summaries for Fridays, that's essentially my MO and my communication on cryptos is, have risk capital, be dollar cost average oriented, and be level oriented. Find the levels I like to trade at. So 40K, 35K, 30K, I'm going to be in Bitcoin. Ethereum, it's pretty much every $500. Ethereum is sitting at 3261. I did add to Ethereum right around $3,000. We tapped that level at 2950. We tapped the yearly pivot as well. And I'm curious to see, do we flush down a little bit more on the left-hand side of the trend line? It's very possible we could keep just sliding lower on Ethereum, maybe into the $2,000 area. Maybe we take out these lows here at 1,800. But I still like longer term Ethereum making new highs. Whether that takes time to have the proof of stake network or having Ethereum 2.0, I don't know. So timing this is not really what I'm worried about. It's more where's the, where's my break even, how much profit potential we have to these highs or higher highs, and just continuing to kind of play the, the long game on some of these cryptos. All right. Dollar, oil, gold, silver. Dollar index 12,141. We had a decent slide after non-farm payroll. Actually, this wasn't non-farm payroll. This is a CPI move from last week. So we had a CPI move last week. Dollar got a little bit weaker. Now I did say in the short term that I would see the dollar if we break out of here. Okay, we break, we retest, we go. We're looking for the dollar index to slide down into channel support, find this yearly pivot, past resistance, past support levels between 12,000 and around 11,900 would be a nice little window for some dollar support, but I think we can continue to slide a little bit lower. So as we get a pullback from, the last couple of days, if this level rejects, let me find a straight line here. If this level on the dollar index rejects right in there, then I like this break, retest, and look for some more continuation to the downside. So point wise, that's about 142 points just to get down safely to that yearly pivot. So let's equate that to a Forex pair and pips. 140 points could be anywhere from 140 pips to maybe double that to 200 and 280 pips or so. Like I said, I like looking for dollar weakness. Honestly, one of my favorite positions right now for dollar weakness is, believe it or not, euro dollar. And the reason why is we have this beautiful yearly pivot sitting up here at 1640, 1.1640. We also have a weekly harmonic merge at 1700. And I'm going to go ahead and put a box right here from this past support to this yearly pivot, and that is going to be a profit window for me on the euro dollar. I'm currently long. I have been long since we, worked down or towards the end of 2021 in November, December. Continue to kind of level in every 100 pips or so, and my break even's around 1500. So if I get to 1640, get to that yearly pivot, I'll have a nice chunk of profit. If I get to 1700, I'll be smiling ear to ear. I think that's a pretty good trade overall. Even if it was simply a, recovery, pullback, and a three-wave correction, if that's all we had back into this window, as long as I'm break even or better in profit by the time we hit 1600 to 1700, I'm pretty happy. The full completion of this weekly harmonic pattern, by the way, is like 1850. So between 1600 1700, I'm pretty happy. 1850 would be awesome. That comes right back into these previous highs. So yeah, I'm looking at euro dollar right now. Another one that should benefit from this. I like euro dollar best. I think that the Aussie is a little bit skittish because we're just dealing with a big channel here on the Aussie dollar. If the Aussie dollar comes back, let's just think about that dollar index stuff correcting and sliding. You notice how the Aussie dollar has a yearly pivot, and price is right in between. So we can have this slow correction back up where the dollar gets a little bit softer, finds this 2022 pivot around 7,400, and then the dollar gets stronger and the Aussie dollar drops. So the next trade for me on the Aussie dollar is probably going to be this trade right here to the downside. Of course, if it remains like resistant, you can see that channel hold. I think that's a really good looking trade. So I do think that Aussie dollars heading up towards this yearly pivot. That's another. That's not bad. That's another 200 pips higher, but it's just probably going to be slow and choppy. So could we get there? Yes. Do we get there fast and aggressive? Probably not. It might be, we had an aggressive pullback, but we still make higher lows and we're looking for higher highs. But just be protective of profits. If you're long Aussie dollar right now, be protective of those profits back around 7,400. Pound dollar, potential resistance right in here. Dollar Swiss, I'm still leveling in. Traders know this. But we came back down to find the 2022 pivot. We have major support here. I did scalp a little bit on the dollar Swiss. I'm looking at this pocket trade from last week. I'm trying to grab about 90 pips or so out of dollar Swiss. This is also one of my top weekly picks where I had some stacked levels to the downside and some stacked levels to the upside. I'm just kind of surrounding the dollar Swiss for a long-term trade. We did that. Let's go oil, gold, silver. Oil's at 83.84. I'm going to set a chart alarm here at the high at 85 and change and see if we break it. 85.32. I've been talking about oil structure for a while. If we're not going to make a head and shoulders, which we are not, since we're right back at these highs, score a point, score a point, score a point. I'm looking at $90 to possibly $100 as this is kind of the amazing little recovery on oil. We get back into a massive monthly resistance level, some massive pocket levels, and then oil makes its way back down. So, do we end up stretching up towards $90 and drop back towards $70? It's possible, but we'll find out. So, I don't think I'm going to be actively short oil until we have, some type of aggressive trend line, some confirmation that price is rolling on the right hand side of it, and then we look for a correction back down. I do think that oil is going to be a fairly vulnerable thing. If you're interested in trading the energy sector, that is XLE, and energy sector last week I think was up like 5%. So we're already starting to see, just from a sector play. Look at that right there. I mean, that's a crazy just explosion right out of the gates to start off this year. We ended the year on a nice little uptrend, and we kicked off 2022 with just a blast off. So to start off this year, I mean, the sector, wow, already 16.5% positive on XLE. Whew, man, energy is just ripping. So, does it look, like it's overstretched? Well, yeah, a little bit, but is there room to get back to higher levels? Yep. We still have, bears or the bulls can score some points way up towards 77 and change. I mean, I would say that's probably our trajectory right now. I don't think there's a lot to stop, oil or energy plays, energy stocks. I mean, I like that spot towards 75 to $80. So if we have any, pullbacks, I'm still looking for higher lows and higher highs. I think XLE is a pretty good play for right now. It's also one of the sectors I'm going to focus a lot on for trading this year. Why not? If it's going to be a bullish sector, and if you're interested, like, hey, I want to be diversified, well, you can trade sectors to be diversified because something's going to perform. Last year, it was energy, it was financials, and it was REIT. I honestly don't see that changing a lot this year. I think that energy, financials, real estate might be a little bit underperforming, or it might slow down a little bit. But I do think that, like, basic materials, I think that consumer staples, I think that value plays will probably do pretty darn well. They're just lower volatility and lower premiums. But I think energy is going to be pretty solid. Financials will probably benefit from raising interest rates and tapering. So again, I'm looking kind of that same story we've talked about, the narrative of growth to value. Tech equals growth. If tech's going to slow down, money's going to get positioned and flowing into value. So I think we're well diversified, or we're well positioned for that in equities on demand. We've got some good plays. We have some tech exposure, but not a ton. We have some good value plays, and we're going to continue to look at building out some of those forever stocks and things that we really like to trade. All right. Anything else? So sector wise, I mean, I'm focused on energy this week. I mean, again, Wall Street's closed today, so there's not really a ton of action. We'll see what the market wants to do tomorrow to open things up. Forex Factor, let's go to a calendar this week and see what we have going on. Earnings calendar this week as well. Some notables. Let me see if I can go to Earnings Whisper and see what we have as notables for this week. We are going to be in some financial. Was it financials this week? I think banks are kicking off a lot of earnings this week, if I'm not mistaken. Let me go to the calendar here. So, all right. So we got Goldman Sachs, we got Charles Schwab, PNC, Bank, Trust. So it's a lot of it's a financial earnings week, and that's going to be interesting. ONB, I have that stock, Old National Bank Corp. I like that stock longer term. It's been in a nice run recently. ONB has been doing pretty well. Here's the weekly chart. So for the last probably 3-4 weeks, solid play. I own the stock around $17, and hopefully we're heading up to new highs. FHN is another one. Don't leave. FHN is another one. First Horizon National. That one's been running nicely as well. So we took a look at this last week, and how to play it, how to own it, whether it's just owning outright or trading some options around it. But the financial play, right? Or you can trade the sector, XLF. Financial sector sitting at 40.83. Any type of dip or pullback I'd like to see, but overall, I like the trajectory on this. I know it seems like it's making higher highs, but right there, pullbacks and go. Or it just continues to stretch until it has to come back later. But sometimes stocks can be tricky like that. All right. Anything else? We did some cryptos. We did oil. Let's go gold, silver, and then I'll start wrapping things up here. We'll keep today's session pretty short and sweet. Silver and gold. Let's start with gold. Gold is trading at 1820. A lot of noise on gold. And as I had that weekly chart up, it almost appeared like we have a high, low, lower high, low. It's just getting really messy in here. So we're either going to form some type of wedge that we're going to break out of, or we have support, we have resistance, and we're just dealing with some internal noise right now. I mean, longer term, I still like gold. If I could buy at 1680 and I could buy down here at 1500, that would be level 1 and 2. Longer term, I'd certainly be going after higher highs, 2100 or higher. But technically, I've said this for months now. It's like silver is just a better trade. I think silver overall XAG USD is a better technical play. 23.0. So we're at $23. I'm looking for upside, really good structure on silver to get back to $28, $29. Even if we fall in this level here, that's a nice little pocket trade, some nice demand. If we find those lows around 1950, I'm still long. That's a 40 plus percent move, by the way. Like I've said this before, if we fall into this pocket, this demand level around 1950, and we pick up and scoop up some silver there, that trade back up to highs is 47%. Okay. I like it. And do I think we can break higher? Yeah, I do think that if you look left on the chart, if we see a decent surge in silver, look, we might have some range trading, right? We might go from 20 to 28 or 20 to 29. That's fine. But I'm kind of also looking at if I own SLV or I own silver and this thing heads up to 45, $50 an ounce, I'm not going to complain about making 100+% return, especially after this low to this high. When it's done, like this is the impulsive wave. This low, this high, that's the impulsive wave. This is corrective. Our next impulsive wave should be taking us to new highs. So if you're willing to wait for it, I do think this is a good hold for the next, 6, 12, 24 months. I will probably maintain my silver position for that exactly, that move. I mean, I take partial profit maybe in the high 20s, but if we break above $30 and really get some legs and close higher, there's not a lot stopping this thing until $40. So anyway, I like silver better as far as the technical trade. Oil we did, gold, silver we did, cryptos we did. Any currency pairs, any stocks you'd like me to take a look at? Tron says pound New Zealand. Yeah, I mean, look, it might be a little noisy, right? I said this last week. This is why it's a single entry. And if you took the trade with me last week in my FX Wave Rider, it's not done. I mean, if this one wants to creep a little bit higher, that's fine. I said 2.01 to 2.02 should be resistance. So if we go to the higher time frame here, here's the daily chart. Just look left. I mean, we're sitting at levels that are resistance. I mean, we've just tested these levels here. I noticed on the daily time frame, I have an awesome overstretched market. So we're overbought. We have some divergence. So I could see if it's not, exactly, oh, I didn't nail the top exactly to the pip. It's like, well, there's resistance right there, and we're at it. There's resistance right there, and we're at it. Right. So I mean, all it has to do is break the trend line. This happens a lot. We break the trend line, we come back and retest a high, we have divergence, and then the market drops. So that is why my system, if it takes a small loss, it gets in with a slightly bigger trade size. And net, if price goes our way, we're going to make money on the way down. And if I increase my trade size just a little bit, I'll make net profit. That's the whole point. Okay. So I'm not worried about it. I think it'll be fine. Plus, we have pivots galore to the downside. We can come halfway back to the midpoint. We can find some equilibrium. We have our overstretch conditions on the daily chart, and we're on the right hand side of the trend line. That's what I'm saying. Just wait. If it's break, retest, go, we form a crown pattern, head and shoulders pattern. We head down to these pivots. That's a lot of pips. That's a lot of pips. System's going to be fine. Not worried about it. Okay, EuroCAD, Wayne. All right, no problem. EuroCAD, 42.83. I have some pending buys on the EuroCAD. Pending buy at 1.40, pending buy at 38.60. Talked about that in Flex. I don't know if I'm going to get those trades, to be honest. I hope I do, because that would be a great spot to build low, and then take it right back up to that yearly pivot at 47. This also could correlate nicely with oil. If oil is going to stretch up into $90 or higher, then I could see EuroCAD stretching lower. So do I want to get short on EuroCAD? No, not right now. What I'd rather do is I'd rather look left and look at a higher time frame and place orders at major support, 1.40, 1.38. I like those spots. That's the trade I'm after. So I'm trying to anticipate where support can form, start small, build a position. I like support here in this area between 4,000 and 3,800. All right. And if that plays out nicely, I mean, let's say I get a position here at 140 and it drops and then rallies back up and then pulls back and we have a three wave move, we have a crown pattern, and we're talking about taking some profit there. And then we have a pullback and we have another leg like this, taking some profit there. How fun would that trade be? I love that trade. Okay. So that's my outlook on EuroCAD. I'm going to try to wait and see if it slides a little bit lower. If it does go lower, that should help our CAD Swiss go higher. CAD Swiss is trading at 7298. If the CAD Swiss goes up into resistance, that's great because we're already positioned down here with some support levels. We're positioned down here with some pivots. We're positioned down here with some price action pro. I've got plenty of buy trades here between 7,200 to 7,150, and I've been in this, in and out of this trade for months. So we've had, fills and profit, fills and profit, fills and profit, fills and profit. I'm just going to take it back up towards resistance. So if CAD Swiss goes higher, that does help the Euro CAD go lower. Those are some. I mean, it's an inverse correlated pair. Make sense? Cool. Any other ones? Swiss yen. I'm still watching Swiss yen. I mean, I'm still positioned. I have, Aussie dollar running. Let me check my platform here. So I've got positions running on Aussie CAD, Aussie Swiss, Aussie New Zealand, CAD Swiss, Swiss yen, Euro Swiss, Euro pound, Euro dollar, pound CAD, pound Swiss, pound New Zealand Swiss, New Zealand dollar, dollar Swiss. I mean, I've got plenty of trades running. So setting chart alarms per usual. Let's keep an eye on things. Chart alarm on CAD Swiss, chart alarm on CAD Swiss, chart alarm on Euro Swiss. I'd like to see this thing, get back above 105 or at 104.26. Watching this one closely, even if this is a 1, 2, 3. See if we can get back to that yearly pivot. I'd like to also see if we're above 105. Let's make our way back to 107. Let's make our way back to 109. This is my profit window on Euro Swiss. All right. And I'm still wondering if my big prediction this year is I think we're going to see some pretty awesome Swiss franc weakness. I think it's going to be somewhat manipulated, probably contrived. Maybe it's a lot from the Swiss National Bank, but dollar Swiss is one of my favorites. I'll plan on building a pretty large position out of this one. Large within reason, like nothing crazy, but just staying very patient and level oriented. And once we start showing some trajectory to the upside, I'm going to look to add a lot of positions. Like, I mean, if I could build from here to here and this thing starts taking off to the upside, I will be adding every step of the way. Probably daily pivots, probably pullbacks, probably just throwing in stacked orders like, every 25 to 50 pips and try to make as much money as I can up towards 96 and 9,700. So, anyway, that is that. So I will keep the, like I said, session pretty short and sweet today. If you have any questions, you got 1 minute to ask. We can review a couple more things, but in honor of Dr. Martin Luther King, in honor of Wall Street being closed, I still have class at 10 o'clock. We have Mind Over Markets if you're interested. Anyone that is a follower or student of Market Traders Institute, if you're not in the Mind Over Markets event this week, you can contact your educational specialist to join. It's going to be a lot of fun. I do have the agenda up right here, so we're going to kick things off today at 1 o'clock. We will be on. So today's from 1 to 6. Tomorrow's from 1 to 6. And then we have our VIP sessions Wednesday through Friday. So looking forward to each and every day this week as we kick things off. It's a big week, right? Like it's an important time to be prepared for what's to come. And it's the type of time where we start to make predictions, we start to make forecasts, and when our plans come to fruition, this is when we take advantage of them. This is where we lay out the blueprint, we lay out our trading plans, and when it's time to take action, we do. So that's what's fun is we don't really see a lot of trades that, oh, I just got lucky because I was in this trade. It's like that's not really how it works. This is about premeditated action and trading your plan, and that's what this week's all about. All right. All right, cool beans. All right, buddy, I'll let you go. I'll keep, like I said, session nice and short and sweet. I'll have probably a YouTube video as well this week on my channel. I'd appreciate if you take a look at that. Last week was, what was last week? Last week was my favorite, my top crypto stocks, believe it or not, was I think I had listed about 10 or 12 stocks last week that I really like between major players that are payment solutions and major tech companies that already have cryptos and Bitcoin on their balance sheet. You see what's going on in El Salvador with legal tender and Bitcoin and treasury bonds. MicroStrategy doing the same thing. We also get into some suppliers and miners around the world. And right now, there's a lot of miners that are going through the transition of leaving China, getting settled in for Kazakhstan, maybe coming to North America. And as long as I start to see some some continuity and not disrupting that business model, then I think those are also some really good opportunities for some speculative growth around cryptos. So yes, they will be, and it's in a way they'll be kind of pegged and correlated to Bitcoin. But if you like Bitcoin and you're long-term Bitcoin, I am, then it makes sense. So cool. All right, everybody. Hey, let's have a good week. Traders, I'll see you this week in Flex, Equities on Demand. And hopefully everyone has a chance to participate in Mind Over Market. It's going to be a great session. You'll get to, pick the brain of everyone this week on the team. And I'll be back here on Friday morning for more Pulver Report. We'll do a little weekly recap on Friday at 9 o'clock, same time, same place. Okay. All right, everybody. Have a good rest of the day. See you this week in the trading rooms. Thanks. Bye.